He faces his toughest test yet, helping government steer the Philippine economy out of harm's way. And it's not inflation that's troubling it, at least not yet, but ever-slowing growth, further saddled by the ongoing corruption allegations in infrastructure projects. In his second year in office, we head to the Bangko Sentral ng Pilipinas and speak with Governor Eli Remolona. It's good seeing you again, Governor Eli.
Great to see you, Cathy.
And in your digs, in your office.
Yes.
Because the last time was...
Welcome.
Thank you. You just got started, or you were just starting your first year, and now
Yes.
you're on your second. And I've
That's
got to
right.
hand it to you. Congratulations on your second year.
Thank
You've
you.
won
Thank
an A- in the Global Finance magazine.
Okay.
So what would you attribute that?
I think we succeeded in taming inflation. Inflation was 8.7% in the beginning of 2023. We're down to 1.5%, which makes me very happy. We've kept the banks healthy. We haven't had a banking crisis in those 2 years. We have ample reserves, so we feel that we're in good shape.
In good shape, and the milestones that you're looking at, looking back to 2 years,
Yes.
and the kind of experience that you've brought along, your near 20-year experience in the Bureau of International Settlements, 14 years,
Yes.
the Federal Reserve,
That's right.
Bank of New York.
Yes.
How have these informed you of how to take forward monetary policy management in the past 2 years?
I think a lot of it is, we've always known the theory. I've been teaching monetary economics. I've been teaching banking for a long time. But real world experience tells you all the details, the operational issues. It helps you face some of the challenges that you didn't expect to be there. So practical experience, I think, really, really helps.
Such as, could you name one?
Well, working on deepening the capital markets. You assume that there are markets, and then you come, and some of those markets don't exist. So working on that helps. Many of the operational issues that are very important behind the scenes, I think, you realize you have to fix them.
I have asked AI on
Yes.
your monetary policy management style to get an idea, given all the info that's
Okay,
available
okay.
online. And it came back with 3 words:
What?
data-driven,
Data-driven.
cautious, flexible.
That sounds right. That sounds right.
Sounds right. I mean, and nothing off from AI, completely on the mark.
I would say so. I would add that I've been trying to be innovative as well in terms of bringing our central bank up to speed with the latest in operational aspects of a central bank.
What should be most proud of when it comes to innovation?
Well, one thing we did is instituted forward guidance in a serious way, which meant the peso doesn't just move every time we change the policy rate. It makes the markets also more efficient in terms of transmitting monetary policy to things that matter, to loans and to investments and to consumption.
I'm reminded back in the June policy briefing, you did make a mention of doing away with assigning probabilities.
Yes.
And just going for scenario building.
Yes.
So how has that now informed you going forward of what next to do when it comes to especially the unknowns, the new risks emerging, and also what to do next when it comes to monetary policy?
It turns out to be not so easy to figure out the scenarios. We used to just worry about forecast errors around our projections. And now it turns out we have to think harder of what possible risks there are to our forecasts. And that helps us with the analysis. It helps a great deal. And it helps us decide on what to do.
But you're still keeping the scenario building process rather than assigning probabilities.
We're improving it. In the past, we had 6 scenarios. That's too many. That's too many. We're down to 3 scenarios these days. We just have more focus on what the risks going forward are going to be.
And what are those 3 scenarios?
So we usually have a scenario that's associated with a more hawkish stance. We have a scenario associated with what we call our baseline. Then we have a scenario associated with a dovish, more dovish stance. So that helps us sort out the issues better.
And this AI, if any help in keeping those scenarios
AI
very informative.
AI has been very helpful. Yeah, we depend not 100% on AI. We depend maybe 10% on AI. But we're still learning how to use it more effectively.
And the rest of the 90%?
Is data that we look at, and then intuition, judgment.
And also inspired by former maybe Federal Reserve chairman like Alan Greenspan, for one, when you made a mention of Goldilocks in defining 5% as Goldilocks, right?
Yes.
That came to mind. Did it? And how did that word come up in your assessment?
We were using the term at the Fed. I just didn't know it was Alan Greenspan who said it first, but it makes sense. He would be the kind of guy who would say it.
That it would mean that the economy is neither too hot nor too cold.
That's right.
So is this your assessment still of the Philippine economy?
At the moment, yes. At the moment, I would say we're in the Goldilocks zone. But we look at the data every day and see whether we should still remain in that zone.
What could change your view then?
Well, if there's a surprise on growth, or there's a surprise on inflation, some inflationary factor emerges that we hadn't anticipated. Right now, some of those include oil prices, electricity prices. On the growth side, we don't know what the effect of this flood control scandal will be on investment sentiment. So those are some of the factors that will go into our scenarios.
And to your point on the anomalous flood control projects, the recent escalation of political risk,
Yes.
Driving some in the academe and some private banks to rejig and rethink their GDP forecasts. Do you
Yes,
think that the government might need to make a move on its 5.5% to 6.5% target for the full year?
Well, actually, I think it affected our expectations of growth looking back. We had been more optimistic about growth looking back, and now I think I know why we performed lower than expectations. I think it might have been partly this. The money that we thought was going into investment wasn't really going into investment. But this might be a good thing going forward. Maybe this time we will meet our expectations if we're able to fix all these issues.
But given what we do know now, that
Yes.
the money didn't go where it should, what impact do you think that might have on the forecast for GDP?
I think we were kind of surprised why our models didn't seem to work that well in terms of the forecasts. And now we kind of think we know why, but we look more deeply into these things and see whether we can do better.
Are the models showing that the government might have to cut the forecast for growth for the full year?
We haven't done that homework yet, but I think not. I think we should have cut the forecast for the previous years. But going forward, I think the factor is not the spending. Going forward, it's going to be investor sentiment going forward. So we're trying to get our hands on that.
What are you hearing from the investors who go into the central bank and ask about what's going on? What are you telling them, and how are you advising them?
They don't come here, but but if they did, I think we can say that they can be more optimistic about the future.
And in your overseas visits, perhaps in your engagements with
Yes.
foreign investors, potential or existing, what do you tell them?
Well, so far they've been happy about the way things are working. We haven't had conversations yet about this flood control scandals, but as you know, there's optimism about the Philippines. As you know, we just got into the watch list for the JP Morgan bond index. That's good news. That's good news. It's going to be good for our bond market. That's going to be good for government borrowing abroad, because this time investors can buy peso bonds very easily.
And do you
So
think
that's a
that
good thing.
that sentiment will carry on despite what's going on, being included
I hope so.
in the JP bond
Yes,
market
yes,
index?
I hope so. I hope so.
What would it mean for the ordinary folks listening right now and viewing us?
Yes.
If we're included in the bond index, what does it mean for them in terms of jobs or maybe in terms of purchasing powers?
In general, it means the cost of borrowing for our investments will be lower, and that should be good for growth. And we're hoping the growth will spread to the lowest levels of our society. For now, we're looking at inflation rates for the lower 30% of our households, and so we're keeping track of how our people are doing at the lower income levels.
And going back to the anomalous flood control projects, you're chair of the Anti-Money Laundering
Yes,
Council,
yes.
and the council has in fact frozen the accounts, funds, and assets of
Yes.
those involved in the controversial
That's
projects.
right. Yeah.
What impact do you think that might have on bank liquidity and of the whole financial system, considering that frozen assets would mean you can't
Yes.
use the funds for bank
So
operations?
we've frozen over 700 accounts so far. We're looking at more accounts to freeze. So that does affect liquidity in general. But our banks are very, very liquid at this point. So it's not a constraint. Liquidity is not going to be a constraint. We have something called the liquidity coverage ratio. And I think for banks in general, our liquidity coverage ratios are 50% more than international standards. So liquidity is not going to be an issue in general.
Even if we're talking about billions and billions more in
Yes.
pesos, as you're expecting to freeze more accounts.
Yes, absolutely.
A categorical statement then that there will be no bank run, that people will be able to encash whatever money they want from banks at this stage.
I think I can say that with confidence. No bank runs.
Now, what is the thinking behind limiting cash withdrawals to 500,000 pesos per day, or the equivalent of 500,000 pesos?
We want it more to make it more difficult for the contractors, for the guys involved in this flood control mess, to be able to take money out of the banks. We just realized that all these transactions are done in cash. In the past, the banks had to report any withdrawal over 500,000 pesos. But in addition to that, now they also can say no if the cash withdrawal is in cash. The cash withdrawal can still be done in the form of checks, in the form of digital means, but it has to be done in something that's traceable, so we know where the money is going. I think that makes a big difference.
But they're checking online, the netizens are not quite happy. I've caught a
Okay.
couple of them saying, and I quote, "Sobrang hassle for customers and businesses regularly requiring to transact beyond 500K.
We
Pera mo
understand
na,
that, yeah.
tapos parang kailangan mo pang mapaalam para gamitin."
Alam namin yon. Kaya pwedeng kausapin yung bangko, sabihin mo kung bakit mo kailangan yung cash, and then the bank can allow cash. If you justify the use of cash, you should be able to get cash.
Could you give us justifications that would pass the metal
Well,
of the banks?
we understand that there are businesses that are really cash-based. And I think banks also know that. So the businessman can come to a bank and say, I need cash, more than 500,000 pesos, and this is why I need the cash. And the bank will understand that, and the bank can say, sure, you can have cash.
Because it could mean funding business, maybe for payroll, which is going to be a
Maybe.
repetitive
Yeah,
activity on the
yeah.
part of the customer. Do you think that this might be a long-term rule
I
by the
think
Bangko Sentral?
it's gonna be a little bit of a hassle in the beginning, but we're hoping that people will begin to switch to digital means. So we want to go digital, so this may encourage that shift.
And also propagate the traceability
Yes.
that you want
Yeah. At the same time.
at the
Yes.
same time.
Yes. Yes.
What about calls for a lifting of the bank secrecy law? Are you in favor of that? There are a couple of bills, and the
Yes.
SEC chair, Attorney Francis Lim, had already said he's
Yes.
backing it
Yes.
in favor of preventing more corruption.
We would support it. We would support it. Right now, because of bank secrecy, when we want to freeze an account, we have to go through the Court of Appeals. And so to avoid that step, to make that step unnecessary, so we can do things more quickly, then we have to lift bank secrecy.
Is the Bangko Sentral doing anything to ensure that this happens more quickly?
We're supporting this is done by legislators. It's in the law. So if we're asked, we'll say fine.
And are there any safeguards to ensure that the privacy laws of ordinary consumers and clients won't be impeded?
There will still be safeguards. Banks are not gonna just. There's a basic bank secrecy process, even without the law. So if there's no reason to give other people the information, the banks won't do it. You can't just go to a bank and ask for my information about my account. You have to have a good reason for that.
Well, before all the anomalous flood control projects, we've been intensely scrutinizing the proliferation of e-gambling operations.
Yes.
And the Bangko Sentral had been actively ordering banks and other financial institutions to strengthen their safeguards. That's gone on for about a month. So I'm wondering what the impact had been so far in curtailing the illegal gambling operations.
Well, we know that because banks, not the banks, but your phones, your digital means would have an app for payments, and some of those apps contain links to online gambling. So we've told the banks or the operators of these systems to get rid of those apps that have links to online gambling. Beyond that, we're proposing a circular that would say things like if the individual who's trying to do online gambling is a minor, the individual receives aid from the government, or the individual is a government employee, that wouldn't be allowed. So we're doing this little things, but I hope they work.
But the PAGCOR has already said a week or two after, a lot of the participants have actually moved to the illegal e-gambling sites.
We know that.
What is the Bangko Sentral doing to get ahead of it?
We're just trying to make it a little more difficult. That's all we can do. We have no authority to stop gambling in general. That's up to PAGCOR. PAGCOR is the one that issues licenses. If you have a license, we can't stop you from getting paid, but we can make it more difficult. We can say no apps on your phone for online gambling. We can say that.
Given the proliferation still and going to the illegal gambling sites and the anomalous flood control projects, do you think there might be a risk that the Philippines would be brought back to the list of the Financial Action Task Force's gray list, and also the European Commission's list of high-risk countries for financial crimes?
So yes, there is a risk, but unlike before, we're now being more proactive. We're doing things before the FATF tells us. In the past, the FATF would tell us what to do. They would a list of action items, and then we have to fulfill those action items. Now we're doing things before they tell us.
Such as? Could you name a couple?
Well, such as all these things we've been doing. avoiding cash withdrawals over 500,000 pesos, removing these links to online gambling. So we're doing many things that without waiting for FATF to tell us.
Has the Financial Action Task Force come to you and asked about the situation here on the hearings, the investigations, and the protest rallies?
They haven't. They haven't, and we don't expect them to. But they've come to us to get us to help with the other countries that are still on the list. So they're asking us, to give presentations to the other countries and advise them on what to do. So I think for now, FATF is happy with us. They're using us as a shining example for the other countries.
And what about the European Commission? Because that came a couple of months after,
Yes.
coming off the high-risk list.
But they have
For
basically
financial
the same framework for looking at things. So we think whatever FATF makes, what makes FATF happy, will make the European Commission happy. But we're not just making assumptions. We're doing all we can without the EU, without the FATF, to prevent money laundering.
In your opinion, has it gotten worse, or has it already been worse even before we got to know what we're knowing now?
It was worse than we thought. It was worse than we thought, but I think it will get better. This flood control scandal was as much of a shock to us as it was to you. But we're working hard to fix things.
What in particular shocked you most?
The scale of it, the amounts involved, we had no idea. I mean, you and I, we knew there was corruption all along, right? But not on this scale. Not on this scale.
And not on the scale that 1 billion pesos could be stuffed into luggages and brought to homes inside cars.
Yeah. And the sight of piles of cash on a table, that's kind of shocking, that I didn't know. This was all done in cash and in such amounts. That is shocking.
As it's been done in cash, might there be maybe an inquiry into how the financial system, or maybe even banks, had maybe had something to do about how the cash was sourced? I mean, what kind of inquiries are you now making within the financial system?
We're making a lot of inquiries. We're finding out all the big. We're trying to identify the big flows of cash throughout the financial systems, the unusually large flows of cash, but not just cash. Any financial transaction that looks unusual, we're trying to analyze.
And what have you found so far? Is it coming more from the government financial institutions, more private, or a combination of both?
I think more from the government financial institutions. And that makes sense because it's government money, so it would go through the government financial institutions. So that's what you've seen so far. But as far as we know, the banks have been following the rules. If any withdrawal that's 500,000 and above, whether it's in cash or not, they have to report, and they have reported those transactions, and then they report suspicious transactions. So far, the banks have been behaving, but we're still looking.
Have you identified those who have not behaved previous
Not
to?
yet. We haven't found any.
And then being chair of AMLC, what do you intend to do to ensure a proper inquiry is made?
Well, mainly we're trying to make the process more efficient. We might try to get some help from AI to identify more suspicious transactions, help us connect the dots. So those are some of the steps.
Have you got a timeline for this?
Tomorrow. Now we're the BSP. We tend to be slow, deliberate, I would say, measured, but we're trying to act more quickly than we used to.
Because that also means dependencies with the ICI,
Yes.
the
Yes,
independent commission investigating the
yes,
infrastructure
yes.
projects,
Yes.
and all other
Yeah,
agencies.
we're cooperating with the ICI. We're providing them the data that we have.
So it's more of ICI asking you for the data or you providing the data more
I'm
proactively?
not sure who was first, but we were always ready to provide the data. We weren't waiting to be asked.
As you face all this, the big shocker, as you make a mention of the anomalous flood control projects and the huge sums of money
Yeah.
attached to it, we're seeing that unemployment rate has risen to three-year highs,
Yeah.
and inflation is at 1.5%.
Yes.
That's the fastest since March this year.
Yes, but still low.
It is,
It's still
compared
low,
to
yeah.
the 8% that you mentioned when you
Yeah,
came into
yeah,
office.
yeah.
But what does this say now about your Goldilocks rates?
We're in the Goldilocks zone, I would say. So there's no given if the data, the forecasts stay as they are, we're gonna stay where we are in terms of policy rate. There may be small adjustments. We may pause. We may ease, but more or less we're gonna be in the same range. The Goldilocks rate is not one single rate. It's a kind of a range of rates.
So are you at the lower end or the higher
We're in
end
the
of
middle.
that range?
I would say we're in the middle.
What values are you attaching to that?
The Goldilocks rate, if you convert it into nominal terms, so no inflation involved, would be around between 4 and 6%. So we're in that range. In terms of the policy rate now is 5%, so we're clearly in that range.
Would there be any upside risks to inflation that the Bangko Sentral is seeing at this point?
We have a scenario for upside risks. If oil prices go up or if electricity rates go up, those seem to be the main risks. Unlike before, food seems not to be a risk. So it's more transport fares, electricity, oil prices.
And not if growth slows? Isn't that a scenario that's also built into your models?
There is a scenario of slower growth. It's not a big risk so far, in our scenarios. Yes.
Unless the DBCC cuts growth forecasts, and that would be a key decision point for the Bangko Sentral?
No, the DBCC makes growth assumptions. They don't really make forecasts. So those assumptions tell them, how to make the budget, how much to borrow, and so on. But the forecasts are the forecasts. They come from models. We discuss what our models say. They tell us what their models say, and then we agree on some assumptions.
So what is the neutral rate now for the Philippine economy?
The neutral rate now is about 5% on the average.
Is there anything to suggest a slowdown in output, perhaps? Because when you look at the slowdown in the August PMI, that's because the purchases are starting to come off, the front loading of the purchases.
Yes, so there are indications like that. We call that soft data, not the hard GDP data. These are sentiment data. These are surveys of what you mentioned is a survey of the purchasing managers who are in the value chain. So they tell us what they think their plans are. And that data suggests some slowdown, not a sharp slowdown in growth. But that's one data set. We look at many data sets.
So you did make a mention of output as a key indicator. So could that mean an interest rate easing as soon as October?
It could, yes, it could. If we see output slowing down because of the lack of demand, then we would step in by easing policy rates, which would strengthen demand. But if it's a supply thing, there's little we can do. So it has to come from the demand side for us to act decisively. Usually it's a combination of both, but I'm just saying, if it's a demand thing, then we're more forced. It's more we're more obligated to act. To act. There's always some trade-off because we don't want to overdo it because then you risk inflation.
But if indeed you are to make a move, it would be in the increment of 25 basis points and
Most
not
likely.
50 bips.
Most likely, 50 is kind of when suddenly you have a big shock to the data that says you're heading for a hard landing, then you would do 50, even more.
And what data would you be looking for then that would suggest a hard landing, considering the
So
the
first of all,
anomalous flood
yeah,
control
first of all,
projects?
the GDP data and then the employment data is the unemployment rate going up very sharply, for example, then we have to act more decisively in terms of easing the policy rate.
So the door is open not for one and done, but a potential interest rate cut of 25 bips in October and December.
It's possible. I wouldn't say it's likely. Given our forecasts, we probably will stay where we are. But every month we get new data, and so we then decide. It's as you know, we adjust the policy rate we decide on the policy rate every 2 months. So we have 2 months of new data to decide. Of course, if it's really bad, we could move the policy rate even outside the usual schedule of policy meetings. But I think that's highly unlikely.
What about a triple R cut? Because you did make a mention in August, liquidity parked with the
Yes,
BSP,
yes.
that is still more than we think it ought to be.
We found out that our reserve requirement has an even bigger effect so far than the policy rate. So part of the easing, in fact, the bigger part of the easing has been in the reserve requirement. Now it's now down to 5%. Now that's pretty low. There's still room to reduce it, but I think we've done most of what we can do. So for me, it's no longer a monetary policy thing. It's more of a structural thing. It's to help the banks be more efficient in terms of lending and pricing their deposits.
Could we therefore say that a triple R cut might come in 2026 then?
I think it would come. You know, we're already at 5%. So if it came, it would be maybe to 2%, from 5 to 2, which is kind of just maybe it's just window dressing, although it will make the banks very happy.
We got about a minute to go. I
Okay.
wanted to see into your crystal ball for 2026.
2026.
If you're already seeing any data points that would suggest, what kind of policy movements can we expect?
I think the good news, if there's continued good news, then we'll stay where we are. We're already kind of, as you said, we're in the Goldilocks zone. In general, that means good news. The right inflation, the right growth rate. So if you can stay there, I think that in 2026, that means we've had data that tells us we're doing okay, we're doing well.
And if it gets not so good data, what is the Bangko Sentral willing to do?
We're willing to ease. If it's not so good data on output, then of course we'll ease. I think the risks of higher inflation, which will make us tighten, that those risks, the way we see it now, those risks are small. So I think we're comfortable for now.
On that
where
Goldilocks
we are.
zone.
Yes, yes.
Well, I much appreciate the crystal ball view and your sentiments on what's going on. Governor, it's been such a
Cathy,
pleasure.
this
as always.
this is good. You gave me a hard time, which
Oh,
is
no,
good.
not at all. You've given really great insights. Thank you, Governor.
Thank you, Cathy.
Catch us again next Thursday at 9 p.m. Philippine Standard Time on One News. You can also check out the long conversation on YouTube. Spotify, Apple Podcasts, and Google Podcasts. And if you haven't done so, like or follow my social media pages. I'm Cathy Yang, and this is Thought Leaders.